Okay, my beautiful friends, do you know what today is? Just happens to be Sunday, Easter Sunday, April 17th, 2022. And I want to wish all of you out here a very happy Easter. All right, people, look, let's talk. There is work to be done. This is my newest segment of Markets, a look ahead. And you and I need to keep our eye on one thing this week. Literally one. What am I talking about? Well, Friday, as you all know, the 10-year yield made a pretty significant jump higher. Now, also as you are very well aware of, we are now today existing under the threat of a bursting of the debt bubble. Now, this single event, which will happen at one point in the future, there's nothing like it. This is the greatest threat facing humanity at this time. Period. The end. There is nothing greater than this. Now, at one point, as we all understand, this debt bubble is going to burst. Now, you and I know where to look. Nobody's talking about this. Again, besides you and me and a couple of other people here that have been trying to warn people for a while here, there is going to be a moment when the debt market sells off very rapidly. Now, you and I can gauge this. We can see it happening, okay, when we get a rapid spike in that 10-year yield. Now, what's going on today, in my view, is a market that is pricing in Fed rate hikes. Now, this is a balancing act. You have to understand what is going on here. And again, we are existing under the threat. It's a monster, and that is the debt market hyper bubble. Now, if in fact you and I see the 10-year yield stabilize, okay, we're watching this for a reason. You understand that. And this is all I concern myself with, really. Look, the market is what it is. The stock market, goes up and down. It's a random walk with an upward drift. The stock market itself is a derivative, meaning it derives value from action in the debt market. Now, understanding that, people always ask me, and you know this, and probably you get the same question. When is the market going to crash? When is the market going to crash? Okay. These kinds of people who are, concerned, and I think everyone has the right to be concerned about a market crash, are not understanding the drivers of the market. It's one thing. It's the debt market hyperbubble. Now, looking at the debt market right now, watching that 10-year yield make that big jump, 2.82. Now, we all knew from a long time ago that we would eventually see the 10-year yield settle above 2%. We spoke about this. It happened. Lovely. Okay, the market did not melt down. Nothing crazy going on here. In my opinion, and I've said this before repeatedly as of late, the 10-year yield is going above 3. Okay, so don't get rattled by, honestly, where the 10-year yield goes. It's the pace of it. It's how fast we get there. If we see, again, and I've covered this so many times, a rapid spike, boom, 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 3%, 3.5%, 4%, bang, 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 you're going to see a lot of pressure on this stock market, and you're going to get a simultaneous rapid sell-off, okay? Cash bleeding out of the debt market, putting a lot of pressure on the stock market. So you got all this cash again leaving the debt market, leaving the stock market. It's just going to move. It's going to go into other assets. You all know this. This is what we're setting ourselves up for. Again, this is the reason why we are betting against the debt, becoming our own central bank, holding hard assets. Physical gold, more specifically physical silver. I also think you should have some platinum and palladium in your portfolios. I own all the metals, okay? Now, I also believe, as you all well know, cryptocurrencies need to be in your portfolio, because when this occurs, Cash is just going to move people into commodities, crude oil, commodities across the board, as a matter of fact. And we're already seeing, some interesting things go on here with regard to commodities. Why are commodities going bonkers lately? Well, that's because these are real things that people want to hold them. They're not like these intangible things. So that's the reason why, again, understanding the environment, which is clearly risk on, meaning cash is still making its way into the equity markets, and it's going to continue that way until it doesn't. And what I mean by until it doesn't, is until we see that rapid spike in the 10-year yield. You all know that. You should know that like by heart by now if you've been following this blog. So here's the most likely short-term scenario moving forward. Okay, most likely is we will see the 10-year yield settle above 3. Above 3. This is the market pricing in Fed rate hikes. Now, I think we're going to get to above 3 rather quickly. And then once we get there, if we settle there, okay, and it doesn't go nuts, higher, bang, 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 we're okay. There's not going to be any big meltdown in the stock market. That's all the market is doing. It always looks ahead. It's trying to price in what's going to happen. Okay? Very, very simple. If that does happen, people, the place to be will remain in risk on assets, meaning equities, meaning the stock market. At the same time, betting against the debt, becoming your own central bank, holding hard assets, having some crypto in your portfolio as well. Not a hard asset, but you own them, okay? They're not issued by a central bank. They're not owed back to an issuing central bank plus interest that they create out of thin air. That's how fiat currencies function. You all know that. You don't even own it. These are like IOUs. When you work, you're working for an IOU. Or if you're working for a fiat currency, any one of them around the world, let's say here, you live here in the United States, you have a job, you work 9 to 5, whatever your hours might be, and you receive that paycheck, that's an IOU. You're saying that you owe these bills back to the central bank, the Federal Reserve, plus interest that they're going to create magically out of thin air. You don't own them, okay? That's just the way it is. When you hold a hard asset, you own it. See this piece of silver? It's mine. All the cryptocurrencies that I currently hold, and I own like 7 different cryptos today, they're mine. I own them. They're not owed back to a central bank plus interest that they create out of thin air. If you own shares in a company, okay, you own these shares. They're not owed back to the company that's issuing these shares for sale. You are a shareholder. You own a part of the company. You understand? I'm all about owning things, and I think you're all well aware of that. All right, understanding the dynamics of the market right now, the biggest driver, the driver, is the debt market, all right? And we understand, people, and you better get this through your head. The debt market hyper bubble is going to continue to be inflated. They were going to throw crisis after crisis after crisis right in your face, and they're going to continue to finance it, like the war that is going on right now, okay? All wars are banker wars. So is this war. And they're going to continue to be funded by puppet governments. You know that. The real government, they're central banks. The collective hundreds of central banks around the world, they are the government. The rest of it is just a shit show to throw in people's faces to say, oh, these people really care about you, and so do these, and vote for these people, but your vote doesn't count anymore. If your vote counted, believe me, you would not be allowed to vote. Anyway, with that story, okay, let's put that aside. You know what to watch for. Let's keep our eyes on that 10-year yield. I will keep all of you on top of that. You know that. So just stick around. What else do we need to keep our eyes on, people here? Energy. Are you watching crude oil lately? WTI is back over $106 a barrel, going much, much, much higher. All right. We had a spike to almost 140. We pulled back to under 100. Now we're going higher. You know how markets work. Any asset, up, 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 drop, find a floor, higher. In this environment, it should be very simple to figure out. Look, they are, of course, setting up a series of more crises to throw in your face. An energy crisis, a food shortage crisis. We already have a cost of living crisis and a COVID dog shit crisis and everything else. Again, it's all about control. They want to push people to their breaking point. Why do they want to do this? Again, so they can institute more control, more of a stranglehold on everyone. That weight that you feel on your neck, well, that's a boot from the puppet governments at the behest of the real government. They are trying to kill you if you are a member of the middle class, and they're going to succeed. They've already have succeeded, and they're going to continue this mechanism until the middle class is essentially gone, extinct, piece of history. So if you are a member of the middle class, that's what's going to be happening to you. As again, this massive wealth transfer effect continues right up to the 1% and 2%ers. You all know that. All right, look. So that's the story here with this market. It's very, very simple. We need to keep our eyes on the debt market, more specifically the 10-year yield. I'll tell you about it every day. With regard to energy, let's see where this thing all goes, people. Inflation, you got all of this talk from the mainstream. Even this morning, I'm watching Bloomberg, okay? And peak inflation bullshit. They must push the lie down your throat to try to give people some sense of normalcy. And things are way out of control. Again, this is all being driven. Nothing we are seeing now, nothing whatsoever, is by accident or by chance. It's all been well thought out in advance. Henceforth, why, just for example, you all know the Federal Reserve has had a 2% target on inflation for a very long time. We are now at 8.5%. Do you really think that's an accident? Really? With the Federal Reserve that is mandated by Congress to maintain price stability? Oh, they missed their target by exponents, literally. But are they being held to account for that? Absolutely not. Will the Federal Reserve be held to account for that? Absolutely not. You have no representation anymore. Again, it's a puppet system. There's no governing body other than central banks today around the world. That's it. Okay, whatever you may still think, if you believe in the system, the two-party system, oh, it works for me, and I'm going to get the person I like to sit behind the Resolute desk, and they're going to save me. They're going to save me. I'm going to be saved by this person. No, absolutely not. It doesn't matter. It makes me laugh, really, when there are still people that believe in that system. It's dead and buried, people. It is dead and buried. All right, look. So in summary here, we know what to look at. And until things change, and I will let you know about it, we will not deviate. We are on the right pathway, you and me, betting against the debt, becoming our own central banks, having some cryptocurrencies in our portfolio, staying long the stock market, get long energy, people. You need to have certain things. If you're a guy like me or a girl who wants to take advantage of the situation, you need to have a few things, and it should be a no-brainer. Where do you want to be in this environment of surging energy prices? It's a no-brainer. How about a duh? Can I get a duh, please? Oil and gas producers. Energy, oil and gas producers. I have 3 companies listed for you, and they've been doing phenomenal on my website. TradersChoice.net, right down here. You need exposure to commodities. I have that listed. What ticker symbols? On my website, TradersChoice.net. With regard to tech, massively it's so oversold at this point in my view, and you can take advantage of that. I bought IBM. I just explained this to people recently. HPE, IBM, the Qs, if you are so inclined. I like to be paid a dividend. You all know that. I want to be paid to own the stock. I want these companies to pay me, period, the end. I also believe that financials, banks, are massively undervalued right now. So, there are long-term plays here. These are not trades. Can you trade around these things? Absolutely. Could you be selling puts against these things, 20% out of the money that expire a month out? Absolutely, because you'll be pulling premium out of these things virtually every month. Yes, you can. And this is how you play the game. It's just so simple. Anyway, look. So that's the story. I think I've laid it all out for you here. You know what to look at. You know why you're looking at it. And you know exactly how to take advantage of it. All right. With that said, people, what else can I tell you? I missed you. I really did. It's weird not doing a video on a Friday. But again, we're back together again. I love that. I hope you have a great Easter. Enjoy the rest of your day. And I will see all of you in the morning. That's all. Please share the video. And I want to hear from you. Comment. I'm out of here.